It is 9:14 a.m. Pacific Daylight Time. It is the 23rd day of March 2026. This is episode 1283 of Bitcoin, and we've got a price bump because taco. And it's not even Tuesday. We don't even get a Taco Tuesday here. What am I talking about? Yeah, you'll find out pretty much right now. This is all about the Iran thing. Trump is saying that he's talking to Iran and that things are going well and that he's not going to bomb their electrical grid infrastructure. But Iran is saying that they're not talking to anybody at all, but we don't know anything about the efficacy of who in Iran is actually saying that they're not talking to the United States officials. You know, confusion is one of the worst things that can ever happen in times like these. But somebody was not confused and was in the know about this announcement. Adam Cochran's got a little bit of a chart analysis here on some dumps right before Trump made his announcement that he wasn't going to be bombing infrastructure. But then we're going to move on to the White House and Senate. They've got a preliminary agreement on digital asset regulation. Then the New York Stock Exchange is going to lift limits on options on 11 digital asset ETFs. And then we'll do the market report right after that. Then in part two of all the news that you can use and more, Saylor is expanding his at the market capacity by quite a bit. We'll tell you all about that one. And then H100 eyes Europe's largest Bitcoin treasury. Yeah, they're salivating there. It looks like they want to buy somebody. And then a little bit off topic, Project N.O.M.A.D, node for offline media, archives, and data. This is kind of an interesting thing, and I want to, make you aware about it. I have not installed it. It's a GitHub repository, and no, I have not installed it. But I think it's an interesting architecture, for lack of a better term, right now. And then we're going to fill you in on Ledger co-founder David Balland's kidnapping that happened a long time ago. It looks like they might have caught the last person that was in on that gig. But first, Bitcoin price on a little rocket ride to $71,000 as Trump orders pause on Iran strikes. Micah Zimmerman has got it for Bitcoin Magazine. Bitcoin price surged to 71K on Monday morning, rebounding from weekend lows near 67,000 as markets reached a sudden shift reacted to a sudden shift in geopolitical risk after Donald Trump announced a pause on planned U.S. strikes against Iran. The move, which followed what Trump described as very good and productive talks with Tehran, triggered a broad relief rally across risk assets. Bitcoin rose roughly 5% to start the week, reclaiming technical levels that traders had identified as critical to maintaining bullish momentum. The announcement marked a sharp reversal from escalating rhetoric over the weekend when Washington had threatened strikes on Iranian energy infrastructure if shipping lanes through the Strait of Hormuz were not fully reopened. That ultimatum had pushed global markets into a defensive posture with oil spiking and equity sliding. Instead, Trump said via social media that the U.S. would delay any military action for 5 days, citing ongoing discussions and the possibility of a broader de-escalation. Quote, very good talks had taken place over the past 48 hours, he said, raising hopes for an end to hostilities that have destabilized the region for weeks. That's a little bit farther out than the region, dude. Iran's response cast doubt on the narrative, however. Officials in Tehran denied that any direct dialogue had occurred, describing Trump's statement as a tactic aimed at lowering energy prices and buying time for potential military planning. The country had previously warned that it would retaliate against energy infrastructure across the Middle East if it was attacked. Despite the conflicting accounts, markets focused on the immediate implication, a pause in escalation. It's a giant, oh, thank God moment and sigh of relief, honestly. Oil prices dropped sharply on the news, reversing gains tied to fears of supply disruption. Hundreds of vessels remain stranded around the Strait of Hormuz, a choke point that handles roughly a fifth of global oil energy flows, though some tankers have begun cautiously transiting the corridor. The reopening of the waterway remains a central condition for any sustained de-escalation. The prospect of strikes on power plants had represented a potential inflection point in the conflict. Targeting electrical infrastructure could trigger cascading humanitarian and economic consequences, particularly in Gulf states reliant on desalination and cooling systems. Iran threats to expand retaliation to similar targets across the region then heightened those concerns, raising the risk of an even wider war. The scenario now appears temporarily delayed, though far from resolved. On the ground, military activity continues. Israeli forces have expanded operations in both Iran and southern Lebanon, targeting infrastructure and supply routes tied to Hezbollah. Meanwhile, nuclear safety concerns have resurfaced after reports of military activity near Iran's Bushehr facility prompted discussions between international and Russian officials. The International Atomic Energy Agency reiterated warnings against any action that could compromise nuclear plant safety. Against this backdrop, Bitcoin price reflects a market recalibrating its view of geopolitical risk. The asset had shown resilience throughout the conflict, holding a firm floor near 66,000, even as traditional safe havens faltered. Gold, which typically benefits from geopolitical stress, has declined in recent sessions while equities faced sustained pressure from rising yields and energy volatility. Bitcoin price's response to the latest developments reinforces a shifting narrative. Rather than trading purely as a risk asset, it has begun to absorb flows during periods of macro uncertainty, particularly when confidence in traditional hedges weakens. And for now, it seems like the market hinges on a 5-day window with peace talks to continue this coming week. All right, so there's the Iran news. That's sort of how we're beginning our week. And I have to reiterate, we don't know who to believe at this point. We really, really don't. I know, as an American, I should stand with the president, right? And clearly he's telling the truth that he's had talks with Iran. He's definitely going to pause. The talks went very, very well. We're not going to bomb their energy infrastructure or at least their electrical grid infrastructure at any particular time in the next 5 days. Do I believe him? No, not really. No, I don't. But then I've got a real problem here with who the hell in Iran is left to actually speak for Iran. I mean, we kill just about everything we see. I mean, every single time that we get somebody close to somebody that we might actually want to be in power, it seems the Israelis have a different view on that and decide to, well, just take that little son of a bitch out. This, to me, is a larger problem. I'm actually kind of surprised that the markets are viewing this as relief, because in my estimation, this is even more confusing than us just cutting loose and letting a whole bunch of shit off the chain and just nailing her onto the wall. So we just don't know what the hell's going on. But there are some things that we do know. And this one comes from tftc.io. This is, of course, Marty Bent writing this one. This is basically his daily newsletter. And he's got this story right here. Iran's top official just threatened anyone holding United States treasuries. The bond market is already unraveling. Muammar Baghir Galbaf, Speaker of Iran's parliament, and a senior IRGC figure posted on X on Saturday, quote, alongside military bases, those financial entities that finance the United States military budget are legitimate targets. U.S. Treasury bonds are soaked in Iranians' blood. Purchase them and you purchase a strike on your HQ and assets. We monitor your portfolios. This is your final notice, end quote. Oh, we monitor your portfolios. I don't know, man. This sounds a bit hubristic to me, but you never know. I mean, it's not like the Iranian government or the regime or whatever you want to call it at this point. It's not like they're, a class act or anything. They're fucking crazy as bedbugs. And of course, the citizenry is the people that are always caught in the middle. And I will always say this. I've always said this. The citizenry of the world is by and large good folks. They're just good Joes. They want to get married. They want to have kids. They want to go fishing. Most people really don't want to think along the lines of how can we destroy somebody's energy infrastructure. Most people are not cut out that way. Only fucking sociopaths are cut that way, dude. And they end up where? In government. And we basically just will cheer at their parades. We're cheering for sociopaths all the time. And it doesn't matter what government you're talking about. The power, it's like, where they say absolute power corrupts absolutely. Not so sure that's true. I think absolute power attracts those that are already absolutely corrupted, i.e. sociopaths. And it's not like Iran doesn't have a bunch of sociopaths leading the country. And again, this goes back to my confusion thing. Is this a guy that we can believe? They say he's the senior IRGC figure and the Speaker of Iran's parliament. How much weight does that actually carry? Do we know? I mean, we're not part of MI6. We're not part of CIA. We're not part of the NSA. We don't have the intelligence that those people actually have. And when I mean intelligence, I mean just a shitload of facts that we will never be privy to. But I digress. Let's continue. A state official with direct ties to the IRGC is publicly threatening sovereign wealth funds, publicly threatening sovereign banks, publicly threatening institutions that hold United States government debt. This is not a random general on TV. This is the Speaker of Parliament broadcasting to 14,700 and more likes on X, telling the world that financing the U.S. government through bond purchases makes you a target. The timing could not be more potent. U.S. Treasury yields have been surging all week long and hit fresh 8-month highs on Monday morning. The 10-year climbed above 4.4% for the first time since July of 2025. The 2-year surged to 3.93%, well above the Fed's policy range. The 30-year pushed past 4.9%. That is the biggest bond sell-off in 2.5 years. It is not just the U.S. Japan's 10-year yield rose to 2.32%. That's nearing multi-decade highs. India's benchmark bond posted its largest single session drop in years, with yields spiking 10 basis points in a day. The Indian equity market shed $150 billion in a single session. The global bond rout is synchronized. From today's banking research, ANZ reports global bond yields rose sharply on Friday as market sentiment took a turn for the worse amid fears of an escalation in the Middle East conflict. JP Morgan's EU economics team is, quote, rapidly adjusting forecasts in a stagflationary direction and now sees 2 rate hikes for both the ECB and the Bank of England. MUFG notes that European central banks are expected to tighten policy in response to the energy price shock more than the Fed, contributing to yield spreads moving against the dollar. Fed Governor Waller said he would have voted for a rate cut at last week's meeting if not for the Middle East conflict. But upside inflation risks make it appropriate to pause. Governor Bowman still expects 3 cuts this year, but says it's too soon to call the timing. Traders have gone from pricing in rate cuts to pricing in the possibility of a rate hike later this year, and the popular steepener trade has backfired as short-term yields rose faster than long-term yields, forcing major institutions to unwind positions. As we covered last week, the Strait of Hormuz situation is fracturing the petrodollar system. Now add an explicit threat against Treasury holders from senior Iranian officials, and you begin to see why the risk-free rate is looking less risk-free by the day. All right, so, okay, that's Marty Bent's little piece on this, and it's really good information. This really hinges on this particular Speaker of the Parliament. How much power does he have? Do we really know how much the Parliament is actually following this guy's words? Because think about it. Think about the threat. I mean, he says, alongside military bases, those financial entities that finance the United States military budget are legitimate targets. U.S. Treasury bonds, specifically, he says, U.S. Treasury bonds are soaked in Iranians' blood. Purchase them, U.S. bonds, and you purchase a strike on your headquarters and assets. We monitor your portfolios. This is your final notice. How much? I mean, I'm not saying that people should automatically dismiss the threat. No, I mean, he made a threat in public. You know, it's probably fairly credible. But how much efficacy is there? Do they have the capability to strike the headquarters? And what about the people that already own the U.S. bonds? Are they supposed to be so scared that they completely just sell out of their entire portfolio of United States bonds? Because, that ain't ever going to happen. I mean, sure, they're going to sell, but they're not going to just unwind all at once. The amount of damage to the global markets would be extreme. So that's not happening. So is he talking about people that start buying them today? See, these people there's no definitions here. There's no real structure to the arguments that are being made. In fact, this just sounds like somebody blowing off steam to me. Am I going to take him seriously? Yeah, I'll take him seriously. But there's just something about the language being used here that it's just too much hubris. So, that said, got another guy here. This dude's name is Adam Cochran. It's at Adams Cochran on Twitter if you want to go check it out. Yes, he has a .eth behind his name, but I'm going to let that go for a sec. Because he says this. 5 minutes before Trump's announcement, $1.5 billion notional worth of S&P 500 futures are bought in a single clip. $192 million of notional oil futures are sold. That's more than 4 times to 6 times any other trade size during the market close. Insiders profited from his lies in broad daylight. Now, I don't know about that. I guess he's probably talking about Trump. Like I said, this guy's got a .eth behind his name, so I'm going to take it with a bit of a grain of salt here. But still, he's got a picture here of these charts, and it literally shows exactly where all this shit was bought and sold. And he's not lying. Literally 5 minutes before the announcement that Trump made that he was not going to bomb the electrical infrastructure of Iran for 5 days, people did sell and did buy at positions that were going to generate extreme profit. And we're talking 5 minutes. It's not a coincidence. This is 100% fucking insider trading. And this has got to be at the closest levels to Trump. And I'm not blaming Trump. I'm just saying, like, if Trump says something and somebody hears Trump say something and trades on that news, I can't blame Trump. That's not Trump's fault, right? Now, if it's, I don't know, Jared Kushner, if we find out that he got a phone call from the Oval Office and it was President Trump talking to his, son-in-law and said, hey, buy this shit and sell this shit, do it right now. Then I've got a solid connection, but there's hundreds of people that are going to be in these discussions. And one of them doesn't even have to like Trump to be able to make a whole shit ton of money on knowing that he is about to tweet this out or put it on Truth Social or whatever it is. How it came out on Truth Social and it basically just went everywhere immediately. And here we have clear insider trading on that news because it was selling exactly what you needed to sell and buying exactly what you needed to buy at the exact same time. I mean, Nancy Pelosi does it. All these people do it. That's why, and I could say, we need a law. Well, I don't think that's actually going to do anything. What we need is to treat these people like the Native Americans treated herds of buffalo at time of harvest and run them all over the cliff. Skin them hide so that we can make a, shelter for our teepees. And, I don't know, jerk the beef or do whatever. I know it's cannibalistic. It's disgusting. It's awful. But these people at this point, I just don't consider them human. Just consider them animals. Anybody that's in the top echelons of any government around the world is, in my view, an animal and not actually a human being. But we've got more White House stuff coming. The White House and the Senate have reached a preliminary agreement on digital asset regulation. And this is out of Atlas 21. According to Politico, the White House and key senators have reached a preliminary agreement on digital asset legislation, aiming to resolve the dispute between traditional banks and digital asset companies over stablecoin yields. This has been the major sticking point, for this entire time. The deal could unblock a crypto regulation bill that has been stalled in the Senate Banking Committee since last January. Republican Senator Thom Tillis and Democratic Senator Angela Alsobrooks announced Friday that they had reached an agreement in principle on regulatory legislation designed to balance innovation and financial stability. The legislation aims to prevent stablecoin yield programs from triggering a massive exodus of deposits from traditional banks, a concern raised by Wall Street groups. Quote, the agreement allows us to protect innovation while also giving us the opportunity to prevent a widespread deposit flight, Senator Alsobrooks said. Tillis described the deal as a positive step. Although the specific contents of the agreement remain partly undefined, of course, early indications suggest that it could ban yield payments on passive stablecoin balances while potentially allowing so-called activity-based rewards. The deal aims to enable a committee vote by April on the crypto market structure bill, paving the way for the first major federal regulatory framework for digital assets in the United States. The dispute falls within the broader context of legislation passed in 2025 known as the Genius Act. So there you go. That's all we really, really need to know about this particular one. But if they have reached an agreement, then maybe this thing will get unstalled. And if it gets let's say this, it gets unstalled in the middle of the fog of war, and I'm talking about Iran and Strait of Hormuz and energy prices and the potential bombing of desalination plants in the Middle East and a wider Middle East conflict going on, will it actually have any effect on crypto as a risk asset? Will it make it look less risky? Will it actually have an effect, or is the war in Iran is it going to have so much coverage that the Clarity Act could actually get passed and get turned into get put on Trump's desk and he signs it into law and all of a sudden it's law and nobody gives a shit because the Middle East is basically on fire? That's sort of the question that I have. Do I have an answer to it? Of course not, because I don't know and nobody else does either. But we do know this. New York Stock Exchange 25,000 contract limit has been removed on options for 11 digital asset ETFs. This is Atlas 21. The two exchanges affiliated with the New York Stock Exchange, NYSE ARCA and NYSE American, have removed the 25,000 contract position limit on options linked to 11 digital asset ETFs. On March the 10th, each of the two exchanges filed 3 regulatory amendments to the Federal Register to eliminate position limits and price discovery restrictions for options tied to Bitcoin and shitcoin number 1 ETFs listed on their respective markets. The Securities and Exchange Commission acknowledged the amendments on Sunday, waiving the customary 30-day waiting period and making the new rules immediately effective. The 25,000 contract limit had been imposed at the time of the launch of the digital asset ETF options in November of 2024. Restrictions of this kind are typically introduced to prevent market manipulation and excessive volatility. Their removal brings the treatment of crypto ETF options closer to that of options on ETFs linked to other commodities, offering institutions greater operational flexibility and potentially boosting liquidity while also simplifying the opening and closing of positions. Among the changes introduced by the regulatory amendments in the ability to trade crypto options as flex options, instruments that feature customizable terms such as non-standard strike prices, expiration dates, and tailored exercise styles. A total of 11 digital asset ETFs are affected by the amendments, and these include BlackRock's iShares Bitcoin Trust, Fidelity's Wise Origin Bitcoin Fund, and the ARC21 Shares Bitcoin ETF. Also included are Bitcoin and shitcoin number 1 ETFs issued by Bitwise and Grayscale. Back in late July, the SEC had already approved the removal of the 25,000 contract limit for the Grayscale Bitcoin Trust ETF. On the NASDAQ front, the NASDAQ International Securities Exchange has submitted a proposal to raise the position limit on BlackRock's IBIT to 1 million contracts. According to an SEC notice dated February the 27th, that proposal is still under review. And in my estimation, it probably won't go anywhere considering that all the rest of these cats have basically removed even a 25,000 contract limit. So, and I am just spitballing here. But it seems to me that a 25,000 contract limit means that you can only buy and sell 25,000 contracts at a time. And maybe that means during a day. Who knows? I mean, it's what the most important part here is that they took the governor off. You know, they took the speed control off of the carburetor here. So I kind of think that means that there's going to be more volatility. And honestly, I kind of wish that they had done this maybe after we figure out what the hell's going on in Iran, even if it was going to be an extended conflict, a protracted war like Iraq. Well, at least traders can wrap their head around what that means, right? But right now, nobody knows what the hell's going on. Nobody knows what's going on with energy. Nobody knows what's going on with Iran. Nobody knows what's going on with whether or not they're going to be able to hit their desalination plants. I mean, they were able to strike, almost get to Diego Garcia, Indian Ocean, United States Naval Base, 4,000 kilometers. And supposedly they were only able to strike 2,000 kilometers from Iran. But now we know that they've got much longer range missiles. Now Europe is kind of in the crosshairs. Again, we go back to, is the guy from the Iranian parliament, is he actually full of shit? Or does he actually mean what he say? And do they have the military efficacy left to be able to perform more 4,000 kilometer missile strikes? Because if so, they might be able to hit the European Central Bank building. Oh man, dude. Monday, right? All right, let's run the numbers. CNBC futures and commodities energy prices off of their tremendous lows that were made right as Trump said what he had to say. Murban crude is down 5.79% to $137.92 a barrel. Brent North Sea is down 8.76%, but it's still over $100, $102.36 a barrel. West Texas Intermediate, 7.97% to the downside. It's still slightly over $90 a barrel. It got down to 86. And that was coming off of it opened at I want to say it was 103. And it plummeted pretty severely. But now they're starting to erase a little bit of the losses. Makes you wonder what people out there are thinking about the confusion between what Washington, D.C. is saying and what Iran is saying. Natural gas is down 5.6% to $2.92 per thousand, and gasoline is down, 7.6%, back to $3 a gallon you go. Metal's getting hit the hardest, though. Palladium is down 1.47%, but gold is down 4.2%. That's 4,382 and 7 dimes for our favorite shiny metal rock. Platinum is down 6.3%. Silver, however, is escaping the full flogging of the guillotine, only 1.4% down, $68.68 per troy ounce. And for those people that bought at 100, I know how you feel. Most Bitcoiners do. We've been there several times. Don't fret, man. Don't fret. Copper is up 1.89%. Ag is all in the red today, except for soybeans. 1/3 of a point to the upside. Biggest loser is wheat, 1.76% to the downside, probably due to shipping. Live cattle up 1/4, lean hogs down 1/3, and feeder cattle up 1/3. S&P, woohoo, we're all saved. Indices are looking good in the green, man. The green, it's a good color on you. S&P is up 1.19%. NASDAQ is up 1.25%. The Dow is up 1.5%, and the S&P Mini is up 2.33%. And then we get to Bitcoin, which is chilling out at $70,700. That is a $1.41 trillion market cap. And we can now purchase 16.1 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,005,691.78 of, and average fees per block are low. 0.01 BTC taken in fees on a per block basis. There looks to be about, 12 blocks carrying 16,500 transactions waiting to clear at high priority rates of 2 sats per VByte. Low priorities get you in at 0.2. And hash rate is gaining ground again. We're not into zettahash territory. We're at 975 exahashes per second. Still, though, more security than I would ever be able to use. So I'm good with it. From Quality Quantum FUD, yesterday's episode of Bitcoin, and I got Psychros with 210 sats. Gives me a YouTube link, and I don't have time to do that right now. Oak Grove with 2,550 sats says, my bad on not hitting send before falling asleep. Big boost, as this is a big read on Patreon, which we'll get to here in a sec. Permanerd with 210 says, this episode brought to you by satsforsnacks.com. Listen to the episode to get the promo code. Nick Dose with 175 says, cheers. Pies with 121 says, thank you, sir. No, thank you. Noster Gang with 100 says, nothing. And then Oak Grove with another 100 says, also. Here's a clip for everyone about what was always going to happen now that we can bet on everything all the time. And he's got a fountain clip here, but I have no ability. I never really set up my system to play clips unless I actually put those in. And this came in. Now, this came in after I was putting the show together, so my apologies there, Oak Grove. However, I do have what Oak Grove wrote here. And he says, all right, that is my bad on not hitting send before I went to sleep. Regarding the $5 wrench attack, we all really need to get our security practices tightened up. I recommend living in a more of a pace that you can carry a firearm and definitely live in a place where the DA doesn't try to jail you for shooting someone in your own home. At the very least, read any or all three of the books from Tim Larkin. Tim Larkin. He instructs you on violence as a tool of survival, like swimming as a tool to keep breathing, leaving the morality and lawfulness to the reader. Quote, violence is rarely the answer, but when it is, it's the only answer. End quote. Tim Larkin from the book Target Focused Training. Now, Urea, you really put a pit in my stomach with this news. Spring of 2019, I went to Rhode Island. Ugh, would go back. I'm delivering motor oil to a where? And somehow or another, I think he wanted to say more, but it's not here on my patreon.com, and I've got the whole thing expanded. So, Oak Grove, I have done what I can do, and I apologize for not clearly reading what else is here, but I'm not seeing it. So just understand, I'm not giving you the heave ho there, pal. Anyway, that's the weather report. Welcome to part 2 of all the news that you can use. Authorities arrest missing suspect in Ledger co-founder David Ballin's kidnapping. This is Daniel Kuhn writing from the block. Spanish authorities have apprehended the final suspect in the kidnapping of Ledger co-founder David Ballin, according to local reporting from La Parisine and Agence France Presse. Ballin and his wife were abducted from their home in central France back in January of 2025 by suspects looking to earn a $10 million euro ransom for the co-founder of one of France's largest crypto firms. At least 10 individuals, including 9 men and 1 woman between the ages of 20 years old and 40, were initially arrested in connection with the case shortly after the rescue last year. Several were placed in pre-trial detention and charged with offenses including gang-related kidnapping, torture, and extortion. Quote, after the events, the French authorities identified and arrested all members of the criminal organization with the exception of one of them, who left the country to seek refuge in our country and avoid his arrest, the Spanish Civil Guard said in a statement on Friday. Yeah, probably should have gone a lot farther away than Spain, dude. It's like next door. The latest unnamed suspect was arrested in Andalusia, Spain, after staying at several locations across the country in rooms rented online, the Spanish Civil Guard said. The Guard said it deployed a large police force during the arrest due to his, quote, dangerousness, end quote, and connection to a larger criminal organization. Certic noted the suspected kidnappers appeared to be connected to a sophisticated network operating out of Morocco. Last year saw the highest number of crypto wrench attacks, with about 70 physical assaults on record. France has seen a particularly notable rise in the number of attacks, including, most recently, the botched home invasion of Binance France CEO David Pinquet. Ballin and his wife's abduction stand out as particularly cruel. The attackers severed one of Ballin's fingers and left his wife locked up in the trunk of a car outside Paris, where she was rescued. So they caught the last guy. I wonder if they're going to be able to peel apart the Moroccan crime network that has been responsible for doing a whole bunch of this stuff. So anyway, there it is. All right, Sailor. We got to talk about him because Strategy has just armed itself with $44.1 billion at the market capacity to fuel Bitcoin Treasury expansion. It's like the fucking Terminator over here, man. He will never stop. He doesn't feel pain. He doesn't feel remorse. He just is coming after the Bitcoin, dude. Micah Zimmerman, Bitcoin Magazine. Strategy has moved to sharply expand its capacity to raise capital through at-the-market equity and preferred offerings adding new Wall Street agents and reshaping its preferred stock authorization to favor a key floating rate series. The steps, which was disclosed today in a Form 8K, gave the company scope to sell up to an additional $44.1 billion in securities on top of large existing programs. In the filing, Strategy said it entered joint agreements with Moelis & Company, LLC, AGP Alliance Global Partners, and StoneX Financial Incorporated, adding them as sales agents under its omnibus sales agreement dated November 4th, 2025. That agreement already named TD Securities, the Benchmark Company, Barclays Capital, BTIG, Canaccord Genuity, Cantor Fitzgerald, Clear Street, Compass Point, H.C. Wainwright, Keefe, Brunette and Woods, Maxim Group, Mizuho Securities USA, Morgan Stanley, Santander US Capital, SG America Securities, and TCBI Securities doing business as Texas Capital Securities as agents. That's a lot of sales agents. And he just added a couple more. Under the joinders, each of Moelis Alliance and StoneX become an agent on the same contractual footing as the original banks, with the right and obligation to place Strategy securities in at-the-market transactions. Alongside the added agents, Strategy and the syndicate executed 3 additional program addenda that established new at-the-market programs for its Class A common stock, that's MSTR, its variable rate Series A perpetual stretch preferred stock, ticker is STRC, and its 8% Series A perpetual strike preferred stock, ticker STRK. These addenda operate under Section 8I of the Omnibus Sales Agreement and are structured so they do not cancel or limit rights under the underlying framework. The company then filed new prospectus supplement annexes under its automatic shelf registration statement, which became effective on January 27th, 2025. Those annexes authorize at-the-market offerings of up to $21 billion of new Class A common stock. Beware the dilution. Holy shit. Up to another $21 billion of new STRC preferred shares, and then up to $2.1 billion of new STRK preferred shares. In other words, Strategy has established new ATM programs to sell up to $21 billion of common stock, $21 billion of STRC preferred, and $2.1 billion of STRK preferred shares. These programs supplement existing authorizations, with the old STRK program replaced by the new $2.1 billion offering. These new capacities sit alongside existing shelf authorizations. Strategy had previously registered the sale of about $15.8 billion of common stock and $4.2 billion of STRC preferred under prior annexes and the base prospectus, and it intends to keep using those prior prospectuses until those capacities are fully sold. In contrast, the company terminated its prior STRK preferred ATM program on March the 22nd, 2026, and the new $2.1 billion STRK annex replaces that earlier effort. To support this mix of funding options, Strategy also amended its charter with 2 targeted preferred stock actions. A certificate of increase raised authorized shares of STRC preferred from 70,435,353 to 282,556,565. That more than triples the pool available for issuance. A separate certificate of decrease reduced authorized STRK preferred shares from 269 million to 40 million. Both certificates were adopted by the board's Pricing and Financing Committee under authority granted in the company's second restated certificate of incorporation and Figure 151G of the Delaware General Corporation Law. Strategy also said they secured legal opinions confirming that its new ATM shares, both common and preferred, will be validly issued, fully paid, and non-assessable. The 8K clarifies that no offers or sales are happening yet, and any actual issuances will depend on market conditions, investor demand, and internal decisions. Overall, the expanded at-the-market programs and reallocated preferred shares gives Strategy flexibility to raise capital while prioritizing floating rate preferred issuance over the 8% STRK series. And that's the end of the article, but I'm just saying overall, it's like the Terminator. He absolutely will not stop. And my question now becomes, what do the standard Class A shareholders think about all of this? Because $21 billion of new stock being issued, he'll be able to. He hasn't done it, not yet, but I mean, this shit could happen by the end of the day for all I know. $21 billion of new MSTR. I don't know if that would make me very happy as a Class A common stock holder to say, well, shit, man, you keep diluting my position. And honestly, even if Bitcoin goes up and the number continues to go up, that dilution doesn't really mean as much as it does when, well, Bitcoin price stays the same. Why Bitcoin? Because the fortunes of Strategy are now intrinsically linked to Bitcoin. It just is, because they hold so much of it and because they've literally made it their mission in life to do nothing but buy Bitcoin. They've got a couple of services that are still out there that people, still buy, and I need them to make actual, more revenue without having to turn to Bitcoin, but be that as it may, it's still dilution. If I have $100 and there's only $1,000 in existence and the US Fed decides to print another $1,000, my $100 now looks more like $50. And it's not exactly different when it comes to diluting people out of their shares. That's what dilution means. Think of it as inflation. Well, actually, not really inflation. It's just printing money. And that causes inflation. But in this case, it should cause the Class A shareholders that are already existent to feel a bit of distress. And at one point or another, do these cats start cutting their positions and running? Because I would kind of be obligated to. I don't want to sit in a stock where they just print more shares all the fucking time, all the time. I mean, yes, other companies do it, but this is extensive. I don't know, man. There's something about this that just kind of gives me the freaking willies. All right. Can't leave Strategy without saying that they did buy more Bitcoin. Accumulation pace has slowed a little bit, but they did buy, let's see, Strategy made a smaller scale Bitcoin purchase last week, adding to the balance sheet. They acquired 1,031 Bitcoin for $76.6 million. The purchases were made at an average price of 74,326. The guy can't win. We're at 70,000. 70,400, somewhere around there. The dude can't win. He keeps buying at the wrong place. I get the feeling now that he just doesn't care, which leads me to other questions, but I'm not going to posit them here. But he did buy, slowed down a little bit. But I saw this headline today. It was before he released the numbers of how much Bitcoin he had. And the headline was basically saying, another $1 billion purchase by Strategy of Bitcoin. Well, $76.6 million does not a billion make. I'm sorry to be the one to run the numbers on that, but whatever. Moving on. H100 eyes Europe's largest Bitcoin treasury with 3,500 Bitcoin in a proposed acquisition, James Van Straten, CoinDesk. H100 Group, a Stockholm-based publicly listed Bitcoin treasury company focused on providing institutional exposure to Bitcoin, said it signed a letter of intent to acquire Norwegian peers Moonshot AS and Never Say Die AS to increase its holding of the largest cryptocurrency. So consolidation is now the play. If completed, the deal would roughly triple H100's Bitcoin stash to around 3,500 Bitcoin, positioning it among Europe's largest listed Bitcoin treasury firms. Beyond that, H100 said it aims to strengthen its institutional profile, improve liquidity, and expand its relevance in capital markets. Have you tried coming up with a product or service to sell to gain revenue? Just asking for a friend. The announcement follows the company's January announcement that it plans to combine with Future Holdings AG. That's a Zurich-based Bitcoin treasury company. Both are backed by Adam Back, a British cryptographer and co-founder of Blockstream. The transition is structured as a Bitcoin for Bitcoin exchange, meaning ownership in the combined entity will be determined solely by the amount of Bitcoin contributed. This approach preserves Bitcoin exposure per share for existing investors, avoiding dilution, while significantly scaling the company's balance sheet. The acquisition will be executed as an all-share transaction with no cash consideration. The target companies collectively hold about 2,450 Bitcoin. Definitive agreements are expected by April the 22nd, with completion anticipated shortly after the company's annual general meeting in May, subject to final approvals. The announcement sent H100 shares up 2% on the day. Yeah, so I think there's not as much appetite out there for Bitcoin treasury companies. But that doesn't apparently matter to Michael Saylor, the Terminator. Just, saying. And if you ever have a Terminator hot on your heels, you might consider installing Project N.O.M.A.D, the node for offline media, archives, and data. Now, the direct link to this GitHub repository will be in the show notes, okay? So you can go look at it more there. But here's what I know about it from the README file that's in the GitHub, and it's kind of interesting. Project N.O.M.A.D is a self-contained, offline-first knowledge and education server packed with critical tools, knowledge, and artificial intelligence to keep you informed and empowered anytime, anywhere. N.O.M.A.D is a managed UI, sort of a command center, and an API that orchestrates a collection of containerized tools and resources via Docker. It handles installation, configuration, and updates for everything, so you don't have to. Built-in capabilities include AI chat with a knowledge base. So local AI chat powered by Ollama with document upload and semantic search. Information library, an offline Wikipedia, medical references, ebooks, and more. It's an education platform, Khan Academy courses with progress tracking via Colibri, offline maps, downloadable regional maps via ProtoMaps, data tools such as encryption, encoding, and analysis via CyberChef, notes like local note-taking via Flatnotes, system benchmark, it's hardware scoring with a community leaderboard, and an easy setup wizard. So what is it really doing, though? Well, it actually, from me just kind of looking around at it, it's sort of like a survival toolkit. And what I literally mean survival. That's why maps are included. Like let's say you install this thing and you've got it running at home on a computer. Like it looks like it kind of wants to be on a bigger computer than like a Raspberry Pi, like maybe a laptop or something like that. But it sort of resembles OpenClaw, right? So that it's sort of like using that kind of architecture, again, for lack of a better term, to let you have like a home base. You can like let's say like I go to Southwest Colorado all the time. So in my, like the maps that I would be, having in my N.O.M.A.D database would probably be a lot of the topographical maps in Southwest Colorado. Well, I can hit those while I'm in Southwest Colorado from my phone, but it's really talking to the computer back in Eastern Washington. With AI chat, like how do I set a broken leg? How do I gut a deer that I've just shot, right? That's where this information library comes from. Or the information library that it's installed with has a lot of this stuff, like the medical references, ebooks, offline Wikipedia, and it's really centered about how to survive. How like if a tornado hits, where this is a tool that helps you, that is it's really focused in on these kinds of things. It's not focused in on engineering. What I'm getting at here is that this is a different thing. This is a different thing altogether. This is what this open claw architecture sort of unlocked. Okay, well, if you can do that, what if we were to pare everything down and just say, I just like like I could build one of these, but instead of being around survivability, maybe it's around gardening. That's all it does, is gardening and permaculture. Or if I'm a rancher, maybe I want something like this that is really all of my own notes about my operation that I can then have AI, the onboard AI, crawl to say, like, let's say I'm about to enter, like I'm entering in a note and say, I'm about to move 100 head of cattle to the benchmark paddock. And let's just say I named it benchmark. And then all of a sudden the AI just goes, whoa, wait a minute. You did that shit 4 years ago and you did it at the same time. And here's what happened. And it wasn't good. You see how this could be very helpful, to like a ranch or a farm, or like somebody who's, running a permaculture business or anything like that. If you scale this to be different than just survivability, then all of a sudden you start having all these little mini packs. Wow, I'm getting a call from France on my cell phone from 33333333333. Should I answer it? Probably not. But back to the whole thing. This just looks like it could be very functional, and it could be very much, rebuilt into all kinds of different shit. Being able to access this entire tool set on my phone, and it's not part of OpenAI. It's not part of Anthropic. It's on my machine. I'm talking to the AI agent on my machine. Will that make it slower? Maybe a little bit less effective? Sure, maybe, because it takes a lot of horsepower to run an AI chatbot. But being able to run an AI chatbot that only has your information, it comes with what it was already trained with, as all large language models are. You got to train them. But once they're locked down and closed off, and the only information it has to scavenge is the information that you give it, all of a sudden, you start having a very, very, very fine-tuned AI that basically works just for you, sort of like these OpenClaw AI agents. And that's what I see. That's what I'm seeing, is that this agentic AI kind of thing is starting to spill over and start looking like other things. And Nomad is one of the first instances of this that I've actually seen. Like if I had a permaculture version of Nomad, it would probably have all of my soil books. It would have all of my entire book of Alan Savory's Holistic Management. It would have all of that and more. It would have all my mycology text, all soil microbiology text that I have, all the papers that I've ever read about any of this, and there's a lot of them. Any diagrams, I mean, everything. And all of a sudden, I've got a permaculture AI just for me. And it's more than AI. This is a huge, this Nomad thing is a very large toolkit. I could build my own toolkit And what I expect to see happening is that there will probably be like a website or somebody somewhere, like, and maybe it'll be the Nomad guys. Who knows? Whoever built this thing, maybe they'll offer a service of, hey, if you don't like Nomad, we're offering a service where we'll build whatever it is that you want, or we'll give you instructions on how to build it yourself. And an AI agent might even be able to help with that. And it probably would. And how? So the question becomes, what do you have in your life? What body of knowledge do you always draw from, whether professional or like as a hobbyist or just as a body of interest? Like you're interested in, I don't know, oil painting. You know, what notes have you made about which oil paints suck and which are really good? And if you've been doing it, like, let's say that you do this for 20 years, how much extensive knowledge have you packed into a toolkit like this? Now, where this goes, and if I've got all this right, who knows? But what is very evident coming out of Nomad is I see this as a brand new, fresh direction that is being propelled by shit like artificial intelligence. It's kind of exciting, and I'm really going to be interested to see where it all goes. All right, so that is the show for today. I do hope you got something out of it. If you didn't, well, I'm sorry about that. That would be a shame. Still, though, the fog of war is thick. It's very thick, and nobody knows what the hell's going on. Is Iran serious about bombing the European Central Bank because they would buy a 10-year Treasury note from the United States Treasury? I'd like to see it try. I'd like to see him try. I'd like to see him actually try to do that shit. I don't want them to actually bomb it because people exist in that office, and I really don't want like innocent people to be dead. But they're threatening to bomb, to physically harm people that buy Treasury bonds. I've never heard of this before. This is the newest threat that I've ever seen. It's weird. We live in really weird times, and all of it is wrapped in fog. So that means that these are very dangerous times for everybody. All of the markets are freaking out. Nobody knows what to do. They call this a relief rally, but I guarantee you traders that are sitting there looking at the news going, oh, it's a relief rally, are probably actually saying, I don't know what else to do. This doesn't feel like relief to me. I'm pounding bottles of Pepto-Bismol and chasing it with whiskey just to get through my fucking day on the floor. Because nobody knows what the hell's going on. So it's a very dangerous time. And it also is a Monday. So have a good one, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.